Hello traders out there in Traderland. This is the weekend edition, good through Monday, February 20th, 2012. My name is Des Woodruff, president and founder of freetradingvideos.com Incorporated, doing business as Grok Trade. I'm a senior analyst and your future trading mentor. And the markets on Friday ended the session mixed. However, the Dow knocking at the door at 13,000, and that is due to the hopes of a Greece deal finally coming to fruition. However, those leading indicators, such as the Nasdaq and Russells, are leading to the downside. But in the face of that, the banks, financials, are leading to the upside. So we have a mixed bag here. VIX down a whopping 7.5%. We are down below 18 on Friday. Gold down, silver down, crude oil up 1.2%. Flat on the US dollar. Now, taking a look here at the markets, we're going to hit this very fast, as you can already probably tell. We have a 3-day weekend here, so we have a lot to talk about. Check this out. We're talking about this big trend line coming higher and higher and higher on the S&P daily chart, and sure enough, we had a hard time getting through that on Friday. We tried to get through it. We pulled back down, closing right at that resistance point yet again like we did on Thursday. So this line is a significant resistance line. For the markets to go bullish, we have to close above that line and preferably above this other monster trend line. We need to get above both of those to really feel good about a continuation with this run. And we also need the markets, the financial markets, the banks to stay healthy. On the weekly chart, we were showing you last week that we were big time running here, a big time extended, overbought, and then we get a doji that there is a huge opportunity for the markets to reverse here, especially if we made a new low. We didn't make a new low. We made a new higher high and a new higher low. But I drew these two trend lines last week, and these are two to be watching. And sure enough, look at this, 1363. We come over here, and that was our high, 1363. That is a major area of resistance based off of what we saw earlier spring, right here around April going into May, and that's precisely where we're hanging up right now. The last time we hit that area, we had a sizable drop. It was a huge drop when we hit that area. Well, we are there right now, gang. Now on the monthly chart, this actually looks very promising. We're already past the halfway mark on the month, and we are clearly above resistance areas on the monthly chart. Not too shabby. I'm going to go here to the Dow, the INDU. We're heading higher, heading higher, but we have some resistance coming up. On the weekly chart on the Dow, we're just heading higher. And on the monthly, we're at a major resistance. Support, resistance, we're at a huge resistance area. What's cool about this is we cleared an area, this 12,827 mark coming across. We are above that, but that trend line, listen, horizontal lines are very important, but your vertical lines are hugely important in trading. Learn to draw those and draw those correctly. Listen, go and get the 201 courses at the website. They will do you a world of good, and I will teach you how to draw these trend lines, and that will certainly help you make money. Go into the Nasdaq here. Nasdaq on the daily chart, we're still going higher here, but you can see on Friday we went bearish. On the weekly chart, we cleared a major area of resistance. Gang, this is huge for us to get past this major trend line. On the monthly chart, we're just blasting through and out of this big symmetrical triangle, and it is on fire, gang. And for the month, for us to be over this trend line, this pink one coming up and this resistance line coming across, wow, technicals are really doing well. Now, on far as small caps are concerned, or the Russells, heading up, we're above a major trend line, all is well, but we got this high base we need to pop. On the weekly chart, high base starting to be made. We need to continue to pop. And on the monthly chart, we are past a nice main trend line, a support area, and we are past that right now. So that is great to see. Now on the banks, this is the monthly chart on the banks. We have this descending triangle that actually broke out to the upside, and we're above the 20-month moving average. We have the 50 falling moving average, simple a month moving average coming down that should act as resistance. But 1845, 1846 is a major area to be watching for as far as this is concerned. On the weekly chart, get rid of this, we're just blasting through, finding resistance at the falling 200-week moving average. This is an area of resistance that we need to be watching for. And on the daily chart, we're just heading higher, and we're at this area 1772, and we're just a smidgen above that. So that is nice and bullish to see for on the financials. Again, this is the largest index of banks that are out there. 460, 470 banks are included in this index, and it's on the NASDAQ, and it's a big one, and that's why we need to watch it. The market's really strong as the financial is supporting it. And taking a look here at the VIX volatility index, we've done an about face, dropping yet again. So all those individuals that were hoping to get into VIX calls at these low prices, you might be set up yet again to take advantage of this. I'm licking my chops for this, to be quite frank. If we can get back here to these lows, there could be some great opportunities, especially when we get down here below $15 or right at 15. Wow, wouldn't that be grand? Here's the monthly chart. We're pulling back, pulling back, pulling back. We're coming to a major area of support. Be watching for the VIX to pop. Remember, when the VIX is low, it's time to go. When the VIX is high, it's time to buy. This is an inverse indicator, and we are at these low levels again, and you're hearing it right here at Grok Trade, free online trading education.com. And take a look at Apple here. Apple, there's the monthly chart, just boom. What's cool about Apple is we're over the $500 mark. It's been really choppy here lately. Let's talk about what we have here. A big run up. This is called a bearish engulfing pattern because this candlestick engulfs this one. The next one, we get a gap down, a run up, and this is called a bullish thrusting reversal pattern. Why isn't it called a piercing pattern? Here's why. It's because the middle part of the body of the previous candlestick right here was not pierced, meaning that we didn't get a close above that. It closed below that, but above the low. So it closed right here, so that makes it a thrusting pattern. But right now we're just going into a sideways holding pattern above $500, so that is a good sign. If we can continue to do this, Apple may have another leg in it to keep going higher, but a lot of selling took place here, but you can see the buyers coming right back in. It's interesting to see. If there was any conviction to the sell side, you would have seen it happen on Thursday and then Friday, as this thing would have broke down, finding probably support at the 20-day moving average, this blue moving average line coming higher. Let's take a look at gold, GLD, and on the daily, chopping around, holding its own. We're staying high. You can see this. We're staying above the 20-day moving average. However, on Friday, we did close just a smidgen below it. But gang, this is a nice bullish formation, almost a bull flag type formation. If I look here at the weekly chart, what's grand here is we have this massive pinching bull flag on a weekly chart. We started to pop through it. We're hanging out. Now we have this little bullish pennant. So gold is really poised to make some new highs. I'm really seeing gold as a bullish move here. And we found this on the monthly chart, the major support line coming higher. We bounced off of that. We're hung up now. There's the area of 171.37 on the monthly that we're kind of watching, and we found resistance right there at that area. So we really need to get above. GLD needs to get above 171.37 for this market to remain bullish. Show you a couple of trades that I had this week. This was a bull pullback off the Stock Picks V newsletter, and the entry price was above 26.27, and this is where it's at now. It's at 27. 80. BWA is another one. A bull pullback right here off the bull or the V newsletter, and off the bull list it popped, and that's where it's at right now. EZPW was a high base. It's popped up nicely. I was talking about the bearish engulfing and thrusting pattern and whatnot. Go here to Chart School. Bearish engulfing. You can read about it, read about the definition, the practical use of it, and a picture of it. You can also right click and copy image and save this for your own. So very helpful. Go into the Chart School. You're going to learn a ton, but one thing I highly recommend that you do is go into the 101 courses. Take these courses here, and then when you're done, take the 201s. That's where you're going to learn how to trade. If I go back to the home page, the part you want to pay attention to is down here. If you want to do the stock picks V newsletter, click on this and go down here to the monthly, and when you click on monthly, type in 2 weeks right here, 2 weeks, and hit apply. You're going to see 14 days free right there. Then after that, it's only $1 a day. So pretty simple, pretty easy. Next weekend, we have a mentorship in Vegas. So if you're a last minute person, we actually have 2 seats available. It is a full class. If you want to be a part, we'd love to have you. Just send us an email at mentor@groktrade.com, and let me share something with you. I just made this, so you can pause the video and read this if you'd like. It's funny. All right, take care, and very safe trading to you.